Welcome. In this video, we'll explore one of the tools in volume analysis, the Volume Profile Visible Range Indicator, also known as Visible Range Volume Profile, VPVR, or VRVP. Volume is one of the cornerstones of technical analysis. It measures how many assets or contracts are traded within a specific period, giving traders a sense of the strength behind price movements. Higher volume often signals stronger conviction among market participants. But to gain deeper insight, traders need to go beyond the total number, and that's where the volume profile comes in. The volume profile visible range doesn't just show how much volume occurred, it shows where it occurred. Unlike traditional volume indicators that sum trades over time, the VPVR displays the distribution of volume across different price levels within the visible range of the chart. You can change timeframes or scroll the chart and the indicator will update automatically, so you will instantly see which prices attracted the most trading interest. There's also a related tool called the Fixed Range Volume Profile, which lets you select the exact start and end points for analysis, popular for studying specific market phases or price swings. Let's break down the key components of the VPVR. Price ranges. The indicator divides the price axis into distinct segments. Volume bars. Each horizontal bar represents the total trading volume at that price level, where the black color shows down volume and orange color shows up volume. Point of control. This is the price level with the highest volume, a key zone where market participants showed the most interest. Value area, usually encompassing 70 to 80% of total traded volume. This area highlights the price range where most trading occurred, often acting as strong support or resistance. Now let's go over the key settings of the volume profile visible range. Row size, also known as resolution or number of rows, controls how many horizontal volume bars appear on the profile. A smaller row size or a higher row count provides more detail, but it may create noise. A larger row size or fewer rows gives a cleaner, smoother profile, but it might miss some important price levels. Ticks per row define how much price movement is grouped into each row of the volume profile. A tick is the smallest possible price change. So, ticks per row tells the indicator how many of those increments should be grouped together into one bar. Lower ticks per row, more bars, more precision, but more noise. Higher ticks per row, fewer, wider bars, smoother profile, but less detail. Value area percentage determines what portion of the total volume is included in the highlighted value area, typically where most trading activity took place. The standard default is 70%. Increasing it to around 80% includes more volume and widens the area. Reducing it to around 60% focuses only on the highest concentration zones. Also, you can change the volume type, total, buy, sell, or delta. Total volume shows the overall traded volume per price level. This is the most commonly used. Buy-sell split separates buying and selling volume, but usually requires access to advanced data. Delta volume shows the difference between buyers and sellers, giving you a sense of pressure. Traders can implement the indicator into their trading strategy in several ways. The first one is for identifying support and resistance levels. The tallest volume bars indicate zones of heavy trading activity. These zones often act as support and resistance, where price tends to react or consolidate. When price revisits these levels, traders often anticipate potential reversals or slowdowns. The second way is to detect price rejection. Low volume zones tell a different story. They highlight price rejection. These are price levels where market participants have been cautious or unwilling to engage in trading. These zones can act as early signals of potential trend reversals, urging traders to exercise caution and seek further confirmation before making trading decisions. The third option is to confirm breakouts. The VPVR may also help confirm breakouts. When price breaks through a key level with strong accompanying volume, the move gains credibility. High volume during a breakout means traders are backing the new direction. Finally, traders pay attention to the point of control. It often shifts as trends develop. If the candles close above it, it may signal an emerging uptrend. If the candles move below it, the market sentiment may turn bearish. By tracking POC shifts, traders can confirm trend direction and change their strategy accordingly. Although the indicator can be implemented in many strategies, it has limitations that should be taken into account. The visible range constantly changes based on how much price history is shown. Slight changes in zooming or scrolling can significantly alter the profile, potentially causing inconsistent analysis. On less liquid assets, volume data may be too sparse or unreliable to create meaningful profiles. On very small timeframes, the profile can become overly sensitive to minor fluctuations, creating misleading high-low volume areas. Different settings can produce different outputs, leading to subjective interpretations. Like all indicators, the VPVR isn't flawless. It can produce misleading signals in periods of high volatility, or fail to account for sudden news-driven moves. That's why traders always cross-reference VPVR data with other technical tools to validate their analysis. If you'd like to put it into practice across more than 700 instruments, you may consider opening an FX Open account and gain access to tight spreads and low commissions. Please note that additional fees may apply. Thank you for watching. Don't forget to like, comment, and subscribe for more market insights.